Antony Vallee is the head of the fixed income of ALKEN Asset Management. And today he talked about strategies of sustainable investment. How does ESG integration impact performance?
I think actually if you look at the numbers the last couple of years, it's been impacting performance positively. I think what is impacting the most is risk reward. When you think about it, we are bond investors. We're doing convertible bond investing, we're doing credit investing, and what we're concerned about most of the time is our downside. And ESG factors, analyzing ESG factors has been quite a big plus when trying to understand what were the risks and managing our downside risk. What we found is governance, most of the time, has been one of the most positive contributors. Being able to avoid companies with poor governance could help you to avoid torpedoes and to avoid bad stories affecting the performance of your account. So it's been quite positive over the last 5 years.
Okay, well. And why are convertible bonds an interesting investment opportunity now?
Now is because we are at a very specific point in the cycle where we've seen people are worried about a change in the market cycle, a potential recession. People don't really know what's going to happen next. And we've seen a lot of market movement. Credit spreads have moved, bond yields have moved, equity prices have moved, but depending on the sectors. And one of the sectors we're looking at is in particular growth companies. Those growth companies have suffered a lot over the last 2 years. If you're looking at different ETFs, which are a good marker, a good temperature, give you like a good temperature for what happened in the market, you could see very poor performance. And this is quite a good signal for us because in our market, we have all those companies, emerging tech companies that have issued convertible over the last 2 years. They're going to come to a market and refinance. Refinancing means issuing new bonds, and the terms are going to be much better for investors. You need to keep in mind, people like us, we are thinking in terms of total return. So if we have bigger coupon and we have lower entry price and good valuations, it makes like a good story for the next 2-3 years.
Okay, thanks. And you were saying after 2 difficult years, what will drive the return of the primary market?
I think the return of the primary market is coming from 2 things. Is first, as I've said, bond yields have been going up. So if you think like a normal company, a typical company, a good quality or poor company, a poor credit quality company, when they come back to the market, they're going to have to pay more in terms of coupon. It's going to be more expensive. So historically what companies have done is to reduce cost of financing. They came to the convert market because convertible investors will accept a lower yield in exchange of potential capital appreciation if the company is performing very well. So this is one factor. The second one, which I think is the most important, is all those companies that have issued convertible over the last couple of years, they need to refinance. So they're going to come to a market again to refinance bonds coming to maturity. And they're going to do it in much better condition for the investors. And we've seen an example this morning with Wayfair coming to a market. Many companies have done it recently, and we expect many more to do it over the course of 2023 and early 2024.
Okay, thanks a lot.